39.6 show, episode number 114, year-end safe harbor tax planning. This is the 39.6 Facebook and YouTube live finance show, the show that teaches high earners like yourselves how to make your money work for you, so you don't have to work for your money. Talk general investing, taxes, real estate, syndications, Airbnb, paying for college, paying for childcare, and even the car you drive. It is almost the end of the year, and what does that mean? Year-end tax planning. We just finished our taxes like 2 weeks ago for 2019, and now it's time to do 2020. It never ends. But this part's pretty easy. The safe harbor rules are all you need to know to make sure that you don't get penalized for under withholding. All right. So I have a screen up. Hello to everybody. If you can hear me, you can see me, please let me know. And if you can see the screen share, please let me know that too. Here we go. Okay, I have the 2020 estimated tax worksheet, which is form 1040-ES. Okay, I think this is actually a longer version than it used to be. I think it used to be a little shorter. Okay, but there's basically just 2 rules for safe harbor. Now, first of all, what is safe harbor? Safe harbor is just a rule for tax withholding of federal tax, that as long as you meet one of the 2 safe harbor criteria, you will not get penalized for not withholding enough money during the calendar year or during the tax year. Okay, because you don't file your taxes until, the next year, like April or October. And when you file your taxes, all you're doing is you're reconciling the difference of the tax you should have paid versus the tax you've already had withheld from your paycheck. This is assuming you're W-2. So it's just an estimate what those paychecks withhold based on what you fill out in the W-4. And they might be holding a lot, like more than they need to. They may be withholding less than they need to. And that all gets clarified and reconciled when you file your taxes. But if you quote unquote owe them money, then you could have to pay penalties if you didn't pay them enough of what you should have. Okay. So this 2020 1040 ES, this estimated tax worksheet, this I think should have been completed when you had your taxes done. And it gives you an idea of what your taxes might be for next year. So it's pretty straightforward. The first line is your adjusted gross income that you expect for 2020. So for a lot of people, you just copy over from 2019 if you're estimating. However, income might be lower this year, so it might be a little lower. Then you subtract your deductions. Okay, then you calculate how much tax that would be based on the tax tables. And basically, you end up with your total 2020 estimated tax. Okay. However, that's not what matters for safe harbor. What matters is what the 2 rules are. So one of the rules is you should have at least 90% of your actual tax for the year due. So there's this 90% rule. You take your actual estimated tax times 90%, and you should make sure you kind of withhold at least that much over the course of the year. You can withhold from your paycheck, or you could withhold from this regular quarterly estimated taxes if you're like a business owner. And even if you're not, you can still just send estimated taxes directly to the IRS through direct pay if your W-2 withholding is not enough. Okay, so one of the rules is as long as you pay 90% of what you should have, that's good enough. You won't get penalized for under withholding. Okay, but the problem with this method is that you have to first estimate what your taxes are going to actually be for the next year. And then if you're wrong and you just do 90% of it, and you end up making more than you expect, then you could actually be below the 90% rule and actually then pay a penalty. Okay. But that 90% rule is there. The other option, which is in line 12B, required annual payment based on the prior year taxes. So the prior year tax rule is a rule that says you can take 110%. I'm trying to find that 110% in here. 110% of the previous year. Here it goes. Line 12B, prior year's tax. Enter the 2019 tax you figure according to the instructions according to the instructions in figuring your 2019 tax, unless you meet one of the following 2019 exceptions. If your adjusted gross income shown on your 2019 return is more than $150,000, enter 110% of your 2019 tax. Your 2019 tax is found on line 16 of your 1040 form. Okay. And there's some mild adjustments, but you can likely ignore that. So you look at your 1040 from 2019 and you look at line 16. That is your total tax. Now, it's a little bit confusing because that's not just your federal tax. There's also some other taxes baked into that from extra Medicare tax and other things. But you can just look at that tax return that you just filed a week and a half ago or 2 weeks ago, like I did, multiply that by 110%, and that would be one of your safe harbor rules. So let's pretend line 16 was $150,000. Okay. You would take 10% more than that, or 165,000. As long as you have withheld $165,000 between you and your spouse combined, if you're married, filing jointly, by the last paycheck at the end of December, then you're fine. If you're not, you can also submit extra money to IRS directly from IRS Direct Pay. Okay. So, when I do these episodes, it's actually good because it makes me actually do the work myself, because otherwise I might not do this. But it's really good. Right around this time of the year, end of October, right around Halloween, do your estimated safe harbor tax planning and look to see what you need to get. So I did this calculation and I found out both what the 110% rule would be and also what the 90% rule would be. And the numbers are drastically different. They are actually over $80,000 apart from each other. So I don't want to be hitting the 110% rule for withholding, because that would be a lot of extra tax. What's nice is that it's October 31st. I have 4 more paychecks. Well, actually, I have 5 more paychecks. I have one on Halloween, 2 in November, 2 in December. My wife only has 2 left, November and December. But I already saw my October 31st pay stub because it's posted online. So I already know what that is. And I already know what my middle of the month paychecks are, because those are just the same. And I have 2 end of the month paychecks, which I can reasonably estimate, conservatively estimate. And surprisingly, our income this year is actually going to be about the same as our income last year, which I was expected it to be less, but it actually wasn't, which I was just kind of shocked by. But the year's not over yet. I might be wrong, but it looks like it's going to be about the same. Since I started working, our incomes have just gone up, 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 up. And I thought this year would go down, but it didn't. So I have a very good idea of how much tax we're going to pay for 2020. And I looked at how much we've already withheld between our 2 paychecks, between the October 31st paycheck for me and the October 1 paycheck for my wife combined, because she's paid monthly. And our federal tax withholding is not quite at the 90%, but if I just wait until my November 15 paycheck, we are going to hit the 90% number. So we're totally fine. In an ideal world, I would just have my paycheck stop withholding after that and hit the 90% number, and we're done. I don't think you can just stop it though, because your W-4, you have to have like your exemptions or whatever. And I don't think I could just change it to say, don't withhold any tax, because I think you can only do that if the previous year you had zero tax liability. We definitely had tax liability for 2019, like an unbelievable amount of money per day. So yeah, we're just going to leave our numbers where we are. I think I actually have mine set to like 3, maybe 4. I could just increase them to whatever the number it is that I feel like I could do without them causing me to, I don't know, raise any flags. Because it will be well above safe harbor by my November 15 paycheck. So that's great. And if we just continue withholding the way we have been, we will have actually overpaid by around almost $30,000, which I have not overpaid tax like at all since we've become attendings. We're usually pretty good about it, writing a check, because you don't really want to get a refund. One, because you don't want to give a free loan to the government, but the other thing is, I think at least from a security standpoint, you'd rather not have the IRS owe you money, because potentially if there's like tax fraud and somebody files a return for you and they take your tax return, they could have that money and it's gone. So from like this a fraud protection standpoint, I've heard that you want to owe money, because nobody can steal a refund that's not actually there. Okay. What else? So 90% rule, the 110% rule. And how do I actually go about this during the year? I look at how much we have withheld and what is our federal taxable income. I do this basically on kind of like a quarterly basis, although maybe not this year, but I usually do. But you can take your most recent pay stub and your spouse's most recent pay stub, look at all your gross earnings, and then subtract out all your year-to-date federal tax deductions. Okay, so you take your total compensation, total earnings, minus your pre-tax deductions from the federal level, and that will give you your federal taxable income. Okay, so I write that number as a denominator. And then I look at how much money was withheld as federal taxes from my spouses and from mine. I put that together, I put that in the numerator. So I take that proportion and I look at what that percentage is. And that percentage is basically the percent of your income that has been withheld. Now, I have a good idea of what our effective tax rate is going to be every year. And as the year goes on, I have a better idea of what it's going to be. So, I mean, this is the tax graph. This is the one that goes all the way up to $2 million. So this should cover almost all my listeners. Maybe there's a couple other listeners out here. And I'm going to take off the sticker here. Hide. So if you look at the red line, that's your effective tax rate. Okay. So if you make around $650,000, your effective tax rate is going to be just under 26%. So if you just take that numerator, the total tax you've had withheld, and divide it by your denominator, your total federal taxable income, that's your total wages minus pre-tax deductions. If you're at 26%, then you're fine. Most people have an idea of where their income is going to be, and you can see that this curve gets relatively flat. Okay, so you could project, hey, I'm going to make 700 this year. I'm going to estimate we're going to have an effective tax rate around 26%. And you can just look every few months and see if your withholding is in this ballpark. Okay, if you're above it or below it or, near it. And remember, you only need to get to 90% of the tax rate. So let's pretend you're over here at $1 million and this is about 30%. Well, 90% of 30% is 27%, okay? And so as long as you're withholding at least 27%, you should be at safe harbor. So I just look to see, hey, am I around 30%? Or if I'm over here, I say, hey, am I around 26%? Or if I'm around here, hey, am I around 20%? Okay, it's just based on whatever your income is. Just look at your effective tax rate and you'll have a very good idea if you're withholding enough cash. And you only have to be withholding 90% of it. Okay, so it's really not that hard. I looked at our numbers, and we've been withholding we've been withholding too much. I don't know why. Maybe the W-4s are different or something. But yeah, that's a little bit disappointing. I guess we'll be getting a refund unless I can get more withheld or less withheld than we already are. I even asked for a tax refund. Usually when we owe them money, and then I write them a check on April 15th, and we end up usually overpaying that one, I guess, by accident because we find more deductions. And then if there's like an overpayment of like $10,000, I usually just roll that over. But this year, because of our cost segregation analysis, we got a big refund. And so I didn't want them to hold on to that. And I'm glad I didn't, because we're already overpaying them a bunch. And actually, we haven't gotten our refund back yet because hasn't gotten approved yet. I don't think. Maybe we'll get audited. Gosh, I hope not. But whatever. If we get audited, we'll just show them all the paperwork, show them the cost tag, and say, eat it. Okay, what's in the chat? Cannot see your screen. Now I can see the screen. Yeah, it's really weird. It does not show up for the first couple minutes. How do you plan on less withholding from W-2 if you're planning to pay less? I'm not. We don't have. So okay. The question is, how can you plan on less withholding from W-2 if you're planning to pay less taxes due to rep's couple status? Well, first, you should actually estimate what your tax is going to be. Okay, so just because you have rep status doesn't mean you're actually going to save as much money as you may think you're going to save. If you have one property and it's a single family home worth $200,000 and divide that, the building value of like 150,000, divide that by 27 and a half years. Well, that's how much? 150 divided by 27 is going to be about 5. So you might have like $5,000 of losses. That's not going to move the needle much on your tax liability. But if you have like $1 million of depreciation, well, then you may be able to decrease your taxable income by $1 million, and that could be enough to get you below zero. I don't know. If you've already withheld all that money, you can't really get it back until you file your taxes. How can you change your withholdings, though? You could update your W-4s. I don't honestly know the rules on updating your W-4 because, they ask you things like the number of kids you have. There is a special worksheet for 2 earners. I guess you could go through that and then maybe make some adjustments. I don't know. You could change it to like 10 and see how much less withholding they give you. But honestly, I don't know. I haven't really run into an issue where it's been that big of a deal. But if you're going to get that much money back, then ideally you would adjust your W-2s earlier in the year so it can make much more of a difference. Okay, that's it for today. Episode number 114. Yes, this is the Halloween. They added a Halloween overlay. Pretty fun. Halloween is coming up on Saturday. It's weird. 2020 is the year that you can wear a mask anywhere, all the time, wherever you go. And the one day you're supposed to wear a mask, there's like no trick-or-treating this year. So sad. All right. Disclaimer, for my entertainment only, maybe yours. This is not legal, accounting, financial, professional, any other advice whatsoever. Have a great night. Until episode 115 tomorrow. If you have any questions, let me know in the Facebook group. I'm mostly writing on the questions. So ask away. Great night.